$1.2 trillion in a single quarter. The mega deal is back.
Oh, please. Volume is down 17%. It's literally just 12 massive checks propping up the whole market.
Hey, a $10 billion check spends the same. Just look at Danaher swallowing Masimo.
Strip out Danaher and the AI hype, and the middle market is a complete ghost town.
Maybe, but European deal makers are somehow beating North America at our own game right now. We need to talk about why. The rundown. $103 billion. That's what buyout firms offloaded in Q1.
And $29 billion of that was just the Jetro restaurant depot sale. It's wild how one massive exit skews the entire quarter's narrative.
Hey, a win is a win. Sponsors are desperate to return capital to LPs right now.
True, but look at the broader Q1 data. Transaction volume actually dropped 17%. Deal value soared past $1.2 trillion, sure, but that's entirely because of 12 transactions crossing the 10 billion mark.
Which brings us to the AI elephant in the room.
Exactly. Nearly 29% of total Q1 deal volume is just massive equity checks into OpenAI and Anthropic. It's not a healthy M&A market, Nate. It's an AI gold rush masking a sluggish baseline.
I completely disagree. A 26% year-over-year surge in value means boards are finally getting their confidence back. Look at Europe. European acquirers are outperforming non-deal makers by 6 percentage points right now. North America is lagging, but the appetite for big swings is back.
Big swings like Intel spending $14.2 billion to buy back a 49% stake in its own Ireland fab joint venture.
Yes, it's a massive structural reset. They're taking back control of their manufacturing destiny.
They are spending $14 billion. They barely have to undo a deal they just did. I am watching the SEC filings tomorrow just to see how they're actually financing this. It reeks of a defensive scramble, not a master plan.
Spoken like a true skeptic? Okay, what about Franklin Templeton buying 250 Digital? Tell me you aren't at least a little impressed that a legacy asset manager is settling an M&A deal partially on-chain.
I'll admit, the plumbing on that deal is fascinating. It's a CoinFund spin-off, so it makes sense, but actually using blockchain for the settlement layer instead of traditional escrow, that's a legitimate proof of concept.
It's like watching your grandfather successfully use Apple Pay. Heartwarming, really.
I just hope they didn't lose the seed phrase for the escrow wallet.
Imagine having to explain that to the board. Oh, quick rumor mill before we move on. Uber is reportedly circling Blacklane.
The premium chauffeur service? So Uber is just reinventing the black car industry they originally disrupted. Time is a flat circle.
It really is. But speaking of flat circles and massive mega deals, we need to talk about the actual biggest swing of the week.
Danaher dropping $10 billion on Masimo. The big one?
$1.2 trillion in a single quarter. I don't care how jaded you are. That is a staggering amount of money changing hands.
It is a big headline number, sure, but look at the actual transaction volume. Deal counts are down 17%. The middle market is practically a ghost town. We are just seeing a handful of whales masking a very slow market.
I wouldn't call 12 deals crossing the $10 billion mark a slow market. That is a definitive shift. The mega deal is back and corporates are finally spending their cash hoards. Just look at Danaher grabbing Masimo for nearly $10 billion.
Okay, the Danaher deal is actually fascinating, but it proves my point. Danaher is buying them specifically to bolt on their acute care diagnostics. They are scooping up premium hospital tech while Masimo is vulnerable.
Vulnerable is a polite way to put it.
Right. Masimo is still bruised from that bizarre detour they took into consumer audio. Danaher read the room, saw the activist investor chaos, and swooped in. It is brilliant opportunism, but it doesn't mean the broader market is healthy.
You are aggressively skeptical today. Danaher is paying a real premium for a market-leading patient monitoring portfolio. That is classic strategic M&A.
I am just reading the data. You know what else is massively inflating your $1.2 trillion headline? AI.
Oh, come on. Not everything is an AI conspiracy.
It is in the numbers. Nearly 29% of total Q1 deal volume is just massive equity investments in firms like OpenAI and Anthropic.
Capital deployment is capital deployment, Maya.
Writing a giant check for a minority stake without operational control is not M&A. That is late-stage venture capital on steroids. You cannot count that as merger activity.
My old managing director would absolutely count it if he could scrape a 2% fee on it.
I have no doubt, but if you strip out the AI hype and the weird internal accounting moves like Intel buying back a 49% stake in its own Ireland fab for $14.2 billion, North American acquirers are actually lagging badly.
Fair point on Intel. That is just moving money from the left pocket to the right pocket to fix their balance sheet. And the regional strategists agree with you. European dealmakers are currently leading the market. They are outperforming non-M&A companies by 6 percentage points.
Because they are doing real integration. They are buying actual businesses, not just compute power.
Wait, did you just praise traditional European corporate strategy? Who are you, and what have you done with the tech journalist?
I like things that make sense on a balance sheet. Speaking of things that make sense, buyout firms finally stopped hoarding and dumped $103 billion in assets this quarter.
Anchored entirely by that massive $29 billion sale of Jetro Restaurant Depot.
Right. Private equity cashing out on wholesale hot dogs and bulk mayonnaise.
It makes you wonder what else they are quietly trying to offload right now. Which brings us to a deal that is anything but quiet. Franklin Templeton is buying a crypto spinoff and trying to settle the transaction entirely on-chain. Voices. I am reading these analyst notes on the Q1 numbers, and everyone is taking victory laps. They are calling this 26% year-over-year surge a definitive shift toward mega deals. 12 transactions cross the 10 billion mark.
Right. But look at what is actually propping up that $1 trillion headline. Industry observers are straight up admitting that 29% of total Q1 deal volume is just massive equity checks into OpenAI and Anthropic.
Capital is capital, Maya.
No, it is not the same. Throwing billions at 2 AI foundation models is venture capital on steroids. It is not traditional M&A. If you strip out the AI distortion field, the broader market is still sluggish. Overall transaction volumes actually dropped 17%.
You are being entirely too cynical. We just talked about Danaher dropping $10 billion on Masimo. Intel is buying back that Ireland fab stake for $14.2 billion. These are old-school, heavy industry mega deals. The boardrooms are open for business.
I will grant you Danaher, but the Intel deal is a buyback of a joint venture. It is financial engineering, not a strategic acquisition.
Spoken like a true tech reporter, you hate financial engineering. I used to build those models. They are an art form.
I just hate when people dress up balance sheet maintenance as a growth strategy.
Fair. But you cannot ignore the regional data. Strategists are pointing out that European dealmakers are outperforming non-acquirers by 6 percentage points right now. North America is the one lagging. Europe is actually making deals work.
Which is exactly why I am tracking the Estée Lauder and Puig whispers. A predominantly stock deal between an American giant and a European powerhouse fits that narrative perfectly.
Speaking of whispers, I am hearing some loud ones about Uber trying to buy its way into the luxury chauffeur market, which we need to talk about next. Spill the tea. I am telling you, the whispers out of Paris and New York are getting loud. Estée Lauder and Puig.
A predominantly stock deal? I just don't see the Puig family taking Estée paper right now. Have you looked at Estée's multiples lately?
That's exactly why it works. It's the classic banker pitch. Estée needs the prestige fragrance bump. Puig wants the global distribution engine.
Puig just went public. Why would they immediately merge for stock? The lockups alone would be a nightmare. I think someone is floating this to pump the valuation.
Spoken like a true skeptic. Fine, what about the mobility whispers? My Uber friends are looking very smug this week.
Right, the Black Lane rumors. Uber buying a premium chauffeur service.
It makes perfect sense. Uber Black is great, but Black Lane is actual white glove service. It's the corporate account holy grail.
Oh, come on. It's a terrible idea. Uber's entire margin expansion story is built on asset-light, algorithmic matching. Black Lane is human-heavy, scheduled, high-touch logistics. It drags their margins right back down.
You're missing the brand halo. They want that high-end corporate traveler who refuses to play the surge pricing lottery at JFK.
I'm not missing the brand halo. I'm reading the unit economics. You don't ruin a beautiful tech margin by buying a glorified limo company.
Glorified limo company. Ouch. Okay, well, speaking of companies buying back their own expensive physical assets, are we going to talk about Intel writing a $14.2 billion check for a fab they already half own?
Yes, let's get into that, because the financing structure on that island deal is giving me a serious headache. Tomorrow's radar. I'm obsessively refreshing the SEC feed tomorrow for the Intel filings. $14.2 billion to buy back that island fab stake. I need to see the actual financing structure on this.
You and your debt schedules. The real drama tomorrow is Gilead. They just pushed the tender offer expiration for ArcLX again.
It's just standard regulatory paperwork.
Oh, come on, you don't extend a tender offer unless somebody in compliance is sweating. My money says there's a shareholder holdout.
Let them sweat. I actually care more about the Uber rumors. They're supposedly closing in on Black Lane.
The chauffeur service? That's a total vanity play. Uber just wants to be the private jet of ground transport.
Or they looked at the margins on premium rides and realized that's where the actual cash flow is.
Fair point. Wait, are we ignoring the Estee Lauder and Puig whispers? Rumor is it's a mostly stock deal.
I'll believe a massive cosmetic stock merger when the ink is actually dry.
We'll see who's right tomorrow.